Okay, and welcome back, students who are taking financial accounting, and we are continuing on with the Chapter 3 problems, the Group B, and we're working on problem 3-50. And as always, if you're not getting it, it's, financial accounting is about understanding an application. So if you're watching the video and you're seeing how it's done, that's the application part of it, okay? If you're not getting the application part, it's probably because you don't understand something. So go back and watch the theory videos and study the material in text. And if you still aren't getting it, then feel free to telephone and speak with an instructor. All right, so this here problem is, it says it's going to take 25 to 30 minutes or so. I'm going to try to skip a lot of rehashing. Watch, if you've worked through the exercises, the Group B exercises, then you already have a good understanding of the theory for this, and especially doing problem 3-48 goes over a little bit of the making the adjusting entries. So it says here, go back and watch those videos to give you a better understanding. So it says here the trial balance at June 30th and the data needed for the month-end adjustments follows. Okay, so this here is an unadjusted trial balance. Here are adjusting entries, and it says open T accounts for the accounts listed in the trial balance and insert their June 30th unadjusted balances. So what it's saying is you're going to make T accounts and put the balances in the accounts for all of these ledger accounts. Then it says journalize the adjusting entries and post them to the T accounts. So we'll journalize those entries, post them to the T accounts, and then calculate the adjusted balance in each account. So, what you're doing here is you're working on, like quote unquote, the worksheet where you, at the end of the accounting period, you have balances in your accounts. So you create yourself an unadjusted trial balance. Then you make your adjustments, and you make those journal entries and you post them to the ledger accounts. When you post them to the ledger accounts, you create new balances in the accounts and create yourself a new adjusted trial balance. Okay, so that's kind of like what you're doing for 1, 2, and 3. So the open T accounts, where they're using the T accounts basically in order to see what the balances in the accounts are, and we're able to create this here unadjusted trial balance. Then we're going to journalize the entries, post them to the accounts. Okay, that's what we're doing for number 2. And then we're going to create a new adjusted trial balance. So let's get to it. Okay, I'm going to work on the next screen. I'm not going to flip back and forth. That is something that look in the textbook and follow along with the information from the textbook. Okay, so our T accounts, all right? So I need a cash account, and the beginning balance was 22,800. We need a supplies account, and the beginning balance was 1,700. We need, oops, let me do it differently here. Sorry about this. Let's do accounts receivable, and the balance is 19,700. Okay. Then I'm going to have a prepaid insurance with a beginning balance of 2,300. Then I'm going to have a supplies with a balance of 1,700. Then I'm going to have an equipment for 85,000 and accumulated depreciation equipment and that beginning balance is 24,000. That's on the credit side. Okay, so there are our assets. Okay, so our liabilities are accounts payable, and that has a beginning credit balance of 2,000. We have a salaries payable, and that has a beginning balance of 0. And we have a unearned service revenue with a beginning balance of 2,500. Then we have our common stock with a balance of 70,000. Retained earnings with a balance of 33,500. And dividends with a balance of 8,100. Okay, and I'm going to need another slide here, so I'm going down to put in service revenue. And that had a beginning balance of 11,000. And then we had salaries expense, and that had a balance of 3,400. We had insurance expense, which didn't have a balance in it. We have just the depreciation expense, equipment, which didn't have a balance. We had utilities expense, which didn't have a balance, and we had supplies expense, which did not have a balance. Okay, so that was the setup of opening the T accounts from the trial balance here and inserting the unadjusted balances for June 30th. So now number 2 is we're going to journalize the adjusting entries and post them to the T accounts, reference them by A through F, and then calculate the adjusted balance of each account. Well, I'm not going to reference them by A through F. You can see that when you're looking at the solution in the solution manual. Okay, but because we only have 6 entries here, I mean, yes, I would, if I was working on a normal set of books, I would reference them, with a new letter for each adjusting entry, because we're kind of like working on in the worksheet process. But there's so little information here, I can work through it without being able to reference anything. So I have to make journal entries. So A is insurance coverage still remaining at July 30th. Okay. So if I have insurance, prepaid insurance of 2,300, okay, and that's, I still have insurance coverage, the amount remaining being 400. Well, the difference between 2,300 and 400 is 1,900. So I'm going to make an adjusting entry to reduce the prepaid insurance, right? Since that's a debit, to reduce it, I'm going to credit prepaid insurance by 1,900, and I'm going to credit the insurance expense account for 1,900. Okay, and so I'm going to now, since that's not a credit, that is a debit right there. Okay, so now I'm going to actually post that entry to the ledger accounts. So for my prepaid insurance, I'm going to credit the prepaid insurance account for 1,900, and the other half of that is my insurance expense account. I'm going to debit that for 1,900. Okay. B is supplies used during the month is 800. Well, if I have 1700 before and I use 800, all right, that means I'm going to end up with a balance of like 900 in that account. But since I'm using the supplies, I'm decreasing the supplies. So I'm going to credit supplies by 800 because that was a debit and we're decreasing it. And then I would debit, some expense account because we're using it. So I'm going to debit supplies expense by the 800. So when I post that entry to my ledger accounts, okay, I have a credit to the supplies account by 800 and a debit to the supplies expense account for 800. Okay, now while I was doing that, the thought occurred to me that, a lot of students, my debits don't equal credits. Make sure you're writing the right amounts on the right side of the ledger account. They say, oh yeah, my journal entries are all right. And yeah, they probably are because it's very easy to see that, your debit equals your credit here. But when you start rearranging the information, it's very easy to go and do something like this. Oh yeah, I'm debiting supplies expense. I'm debiting supplies for 800, and then when I come down here to my supplies expense account, I'm crediting supplies expense. Well, notice what I just said. I said I debited supplies for 800. No, you're not debiting supplies for 800. You're crediting supplies for 800, and you're debiting supplies expense for 800. Just the opposite. Okay, so it's very easy to rearrange the information incorrectly because notice you have to be flipping back and forth. Okay, so you have to focus and concentrate when you're posting your entries. All right, and make sure that you're putting the information in the right spots. All right, depreciation for the month is 2,500. Right. So if my depreciation for the month is 2,500, that means I'm increasing my depreciation account, which was 0. So I'm going to debit depreciation expense by 2,500, and I have to credit something else. Well, the opposite side of that entry is the accumulate depreciation for 2,500. And that's depreciated equipment, so write equipment there. Okay. And of course, when I go to post that, under my accumulate depreciation, I'm crediting it for 2,500. And my depreciation expense account, I'm debiting for 2,500. Right. Next one is accrued utilities expense at June 30th of $900. Use accounts payable as the liability account needed. So if my account, it's telling me to use accounts payable, which is liability account, and if it has a balance of 0 and it increases 900, we increase our liabilities on the credit side. So credit our accounts payable for 900, and we're accruing utility expense. So debits have to equal credits. So I'm going to debit utility expense, which makes sense because why? My expenses go from 0 and they're increasing by 900. So now when I post that entry, I have to accounts payable. I am crediting accounts payable by 900, and I am debiting my utility expense by 900. E is accrued salaries at June 30th for $800. Okay. Well, if I'm accruing the salaries, that means I'm expensing the salaries. So I'm going to debit salary expense for 800, and I have to credit something else. And since it is an accrual, that means I owe it. So it's salaries payable. All right, I use the salaries payable account. Okay, for 800. So I post those. Find salaries payable 800, and salary expense gets a debit for 800. And The last thing here is, the last entry is for service revenue still unearned at June 30th for $1,200. Well, our unearned service revenue was $2,500, and it's still, we have $1,200 that's still unearned, which means we earned the difference between the two, which is $1,300. So we have to reduce that unearned revenue account, and since that is a credit, the balance in that account is a credit, that means we're going to debit the unearned service revenue account for $1,300, and we're going to credit something else. Well, we're going to credit our service revenue because we're recognizing the revenue for $1,300. So now when we post it, unearned service revenue, we're debiting it for $1,300 because we're reducing it, and we are crediting our service revenue up here for $1,300. Okay, so now we've posted them to those journal entries to the accounts, and the next thing that we have to do is, it says here to calculate the adjusted balance in each account. Right, so we're going to go down and calculate the balance. So no change to the cash, no change to the receivables. The difference in our prepaid insurance now is a debit of $400 because $2,300 less $1,900 is $400. For our supplies, the balance is $900. 17 less 8 is 900. Equipment is $85,000. The accumulated depreciation is now $26,500. 2 credits, so we add them together. Our accounts payable is $2,900. Salaries $800. Unearned service revenue is $1,200 on the credit side, right? Because $2,500 less $1,300 is $1,200 on the credit side. Our common stock is $70,000. Retained earnings is $33,500. Dividends $8,100. Service revenue is $12,300. Adding those two together. Salary expense is $4,200. Insurance expense is $1,900. $2,500. $900. And $800. Okay, so we've just now calculated the balances in those accounts. So we did one and we did number two. Now it says prepare the unadjusted trial balance at June 30th. Okay. All right. So let me insert another slide here. New slide, insert. Okay. So I'm going to, you can look at the adjusted trial balance that is in the solution manual. That's what it should look like. Okay. I'm not going to put in the heading. Just remember the heading date should be June 30th, 2014. Okay, because it's as of that specific date. I'm just going to remember, I'm doing this as homework, but I'm fully cognizant of the formatting issues. I mean, for my heading, I should have the name and write out the word adjusted trial balance. You know what? I'm doing it right now, but I'm abbreviating Novelty Nook Inc. Okay. This here is an adjusted trial balance because it's after we made the adjusting entries. So I'll put the title as adjusted trial balance. And the date is whatever date that we are creating this trial balance on. So that's June 30th, 2014. And of course I have a debit column and I have a credit column here. And then I have my accounts over here. Now I could have a column with account numbers, okay? but we don't have any numbers in this particular problem, so we're not going to have an account number problem. If I had account numbers for the ledger accounts, I would write them in. Okay, I would probably create a separate column for that. All right, so I'm going to write small here to get this in. Cash, accounts receivable, prepaid, insurance, supplies, equipment, accumulated depreciation, equipment, accounts payable, salaries payable, unearned service revenue, common stock, retained earnings, dividends, service revenue, salaries revenue, insurance revenue. I'm sorry, not salaries revenue, salaries expense, insurance expense. What I was just thinking about while I was doing that was, I'm doing this all by hand, and you're seeing how long it takes to be doing it by hand. And back in the day when you didn't have computers, you were doing it by hand like this. And even today with small sets of books where it makes more, I actually take less time doing it by hand than being able to enter it into the computer system. But you can see that this here is just a lot of, repetitive work, right? So I have depreciation expense, utility expense, and supplies expense. And then of course I'm going to have a total for my totals. So all I'm doing then is I'm just transferring the information from my ledger accounts here, the balances in these accounts. Okay, all I'm doing them is transferring them here to my adjusted trial balance. And again, this here's all a technical thing. All right, I'm just making sure I'm writing the right number on the right side of the trial balance. It's, if you stay focused and concentrate, I mean, it's not to say that you're not going to make mistakes. I mean, even you see I'm making mistakes, okay? But if you stay focused and concentrate, you'll make a lot less mistakes, and your debits should equal your credits. I'm thinking of other things because I'm an instructor, but if I was doing this for a client, all right, or a customer, or I was in the workplace, something like this, I would not be making a mistake because I'd be so focused and I'd be double checking myself all the time. For example, I'd jump up here and go, okay, my cash account is $22,800 on the debit side. I mean, this is what I would be thinking in my head. It's $22,800 on the debit side, and I'd write $22,800 on the debit side. And now when I go to pick up my accounts receivable, I have 19,700, and I'm double checking that it's 22.8. Okay, so now I'm going to write my $19,700 on my debit side, and I'm focusing and concentrating so that I'm not making mistakes, right? But I'm not going to bounce back and forth and take up a lot of time, right? So I'm just going to put in the balances in the accounts, 85,000. And now I come over to the credit side and I put my dollar sign as the first number on the credit side of 26,500. Whoops. I need a new line here, which is my accumulated depreciation. If I'm using lines with paper, obviously this would all line up. Okay. So don't get all bent out of shape if it's not exactly across here. And then, so for my common stock, I have 70,000 and 33,500 for retained earnings. Now for my dividends, that's a debit. So I end up on 8,100 on the debit side. And now I bounce back over to my revenue accounts of 12,300 because that's a credit. And then now I have to go back over to my expense accounts, which are debits. So I have 4,200, 1,900, 1,900, 2,500, 900, and then 800. And of course now I have underlines, which represents a mathematical calculation. Now when I'm doing this, yes, I am adding up all of my debits, and that gives me 147,200. And since that's the end of a calculation, I put in a double underline and I put the dollar sign to show that's a dollar amount and not a decimal. Now, we know debits have to equal credits, and I've mentioned this before. You do not just automatically say, okay, 147,200, right, and put it in the credit side. Before I go there, when you're adding these numbers up, you don't add it up just one time. Add them up 3 times, okay? I've mentioned that in other videos, okay, before, so I'm not going to go into it. I just want to point out, yeah, it seems like it's a lot of extra work, but by doing it 3 times, you're going to have a high probability that the 147,000 is correct. And now, no, you don't just write it as a credit because you know debits have to equal credits. No, add up your credits 3 times. And each time, you should end up with 147,200. Write it in, double underline, and dollar sign. Okay. If you don't, you may have a mistake. And if you write 147,200, you're cooking the books. And there's no excuse for that. I mean, that's the way it is in the accounting world. Okay. So you have to add up your debits, add up your credits, because that is your double check to make sure that those totals are correct. Okay. If you made a mistake in your debits and you just wrote that mistake over in your credits, or if that's right and you had a mistake in your credits, I mean, there's a mistake, all right? And it's going to get found. And if you were a bookkeeper in my workplace, you wouldn't have a job. Okay. So be aware that, yeah, this here is tedious work. And you saw that, like right now, I'm at 27.5 minutes to complete this. Okay. And let's see, it says here, how will the company use the adjusted trial balance? Well, you'll use the adjusted trial balance to prepare the financial statements. But realize that, that this took a half an hour to do, okay? And all I'm doing is I started out with beginning balances, and sure, it took 7 minutes to set up those T accounts, okay? But still, it took me 20 minutes in order to make the adjustments, post them to the accounts, create the balances, and then create the adjusted trial balance. So, doing books by hand does take time. And just get used to the fact that that's what's going to happen. You're going to have to take the time. I mean, you're sitting there watching this video for 28 minutes now, and you're seeing me do it. Okay, so if I'm doing it, realize that you need to be doing it. Right, so with that, I'm done with the video, and I will see you for problem 51 in the next video.